China has been undergoing major issues in 2018. The stock market has been suffering and their economic activity has been rather slow. With trade tensions intensifying, there needs to be some positive news from China or the slide will continue. New stimulus measures are being put into place, adding on top of already historic levels. But be warned, when the dominoes fall, none will be spared. You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening within China. This is an issue that I cover regularly here on this channel. I wanted to bring you this information first. China guided the yuan to its weakest official level in a decade on Tuesday, a move that could fuel expectations of a further self-reinforcing slide. I've shown you this currency particularly as it goes towards that 7 to the US dollar mark. I've been tracking it, I've been showing you it here, and now they brought it to its official weakest level in 10 years. The yuan's depreciation puts pressure on Chinese policymakers who want to give investors a bigger say in determining the currency's value, but appear uncomfortable with letting the yuan fall beyond a symbolic 7 to the dollar. Now, what exactly are they doing? Are they purposely, intentionally trying to weaken their currency to then boost exports? Well, many say that this is what they're doing. China has publicly stated that they are not doing this intentionally, and so they want to do this only because of the short-term noise that's happening. We want to be able to just do what we need to. We're not trying to weaken our currency. Now, you remember about 2 years ago how the US was suggesting that China was a currency manipulator. Officially, they have stated now that that is not the case. So it's up to you what you want to decide on this topic. The recent slide has reignited speculation about whether further weakness could spark capital flight, which would in turn exacerbate the currency's swoon. We have an issue here that you want a weak currency in a country that exports, because obviously the more expensive your currency is, the more that those commodities or whatever they're buying is going to cost. But if you have a stronger currency, then you're going to be able to keep money within the country. So there's a balance that they need to find, and that doesn't happen overnight. It doesn't happen in a few months, and it's actually always in flux. On Tuesday, the central bank set the dollar's reference rate at 6.9574 yuan. This here shows us where they are willing to go. It's trickling further and further here, going closer and closer to that level, the weakest, in fact, since May of 2008. Selling off. All right. The yuan has weakened against a basket of currencies this year, but has fallen more sharply against the dollar. So the yellow line is against 24 currencies, and you see that coming down what looks to be just over 2%. And the green line is against the US dollar, and that has declined, in fact, more than 6%. So clearly, when you take a currency, you can't suggest if something is strong or weak. You need to base it against something else. It is all relative. So when we see that, in fact, this one currency, the yuan, is weak, it's a different definition if we were looking at it against the basket or against the US dollar. What is it within its own country? Does it have any worth? Is it a Zimbabwe dollar? We need to be able to determine all of this, all right? Now, this is the China PMI. Looking at any sort of manufacturing or production is particularly important in a country like China because they produce so much. And you could see that it has, in fact, declined all throughout 2018. When I look at these statistics, I always try to factor in how important is the PMI, how important is manufacturing to this individual country. Slowly but surely, countries like the United States, Canada, the UK, they're producing less and less. So these are factors that need to be addressed, okay? So I just wanted to show you that, and for a country like China, clearly important. And if their PMI is declining, if their manufacturer is declining, if they're not seeing the exports that they did before, we need to link all these facts together and then decide what could happen in the future. I'll leave that up to you. Looking at the Chinese currency versus the US dollar, this is just showing us that it has rocketed up past 6.97, or I should say below 6.97. But seeing the currency weaken here is going to prove very difficult in the future if they keep it consistently heading in this direction. This is just another chart showing us what has happened here, that they can't keep it at the level where their fix of 6.9574 is. It keeps on decreasing in its value. Well, they may push it up. I have to see. I have to track it. Let's look at this. Now, this article is out of Bloomberg. The early indicators show that economic conditions continue to weaken both on the domestic and the external fronts. Economic sentiment is very poor, particularly among small private firms. We expect policy support for the economy to continue to broaden all aspects of growth, including exports, consumption, and investment. And you might be reading this article, as many people do, they just skim over them, and you might hear policy support. And they just continue on to the next paragraph, no problem. But what do they mean by support? Well, they talk about it right here. The government this month introduced a raft of measures to stabilize sentiment, including steps to boost liquidity, in the financial system, new tax deductions for households, and targeted measures aimed at helping exporters. So here we are. For the exporters, right away, if your currency's weakened, this is going to benefit you. Boosting liquidity, we're talking about stimulus measures. They're talking about the PBOC going in. They're going to reduce the requirements, the reserve requirements for banks. They're going to allow riskier and riskier loans. And they will, in fact, do the same thing they've been doing for years. They've been using their national team to buy up shares of the market. They've been engaging in all of this different monetary policy and fiscal policy, just like other countries are doing as well. Now, the tax deductions, I don't know all the details of these particular tax deductions, but what I can tell you right here is that when we see tax deductions, in general, it's good. That does stimulate the economy, but not when it's on the wrong people, okay? It needs to come for the middle class. That's who needs to benefit from any tax deduction. I don't know the details, like I said, but let's keep our eyes open to get some more details about that. I didn't want to get into too much detail, but I just wanted to show it to you in case you wanted to pause the video, see it for yourself. Earliest indicators show that China's economy decelerates again in October. It's showing us different commodity prices and property and so on. There's a lot of things here just to showing you that October was a weak month, but hey, it was a weak month for all markets around the world for the most part. Negative equity returns to Hong Kong as small, older flats values drop by 20% in a declining market. This is one of the hottest markets in the world, and yet, after hearing hundreds and hundreds of comments of how the property market will never, ever go down, we now have this official statistic coming out about Hong Kong. Hundreds of times I was told that this is impossible, and here we have it. I will be told again on this video and in all future videos I do. The euphoria is very clear to me. Many people who bought flats in the last couple of months have seen their value decline by as much as 20%. Negative equity vanished from Hong Kong's property market in early 2017. Things turned around. And of course, this can go up higher from here. It doesn't mean that this will be, that's it, this is the crash, this is, the sky is falling. I see those comments all the time. I'm not saying that. I'm bringing you the information from the South China Morning Post. I'm reading the article. I'm getting into the information. You draw that conclusion on your own. Now, I do think that these property markets are heavily overvalued. And in times where we have this overvaluation, we have a reversion to the mean. Not the meme, by the way. I saw people in the other previous video. Not the meme. Not the meme. But the mean. Okay? That means back to reality. The mean. Okay? The mean. And it will happen. It will happen with every single asset, and that's just the way it works. The United States told Taiwan that it has its back on Wednesday amid rising threats from China against the self-governing island. So we could see here that there are tensions going on, not just between the US and China itself, but because of what's happening with China and other countries like Taiwan, the US is starting to say, you know what, we're going to put our ships over there, we're going to make sure that nobody's touching you, and of course this could easily start something off very big. We don't want to say that word, but it's not pretty. Okay, so that's that. Last but not least, GM CEO Bara says that the automaker is watching China trade very carefully. There's one point that I wanted to stress from this. At the same time, and sales in the country were down 15% over the same quarter last year, and there are signs of trouble in the region. That's obvious to me. We're looking at this information for China. We're seeing what they're doing. It's not all bad. It's not all good. Certainly, there's a lot of growth potential in the future for China. In one reason, yes, because of we obviously have a massive population. We have a growing middle class in general over these last few decades. And that has been particularly evident. They're willing to go the extra mile. They've been opening up their country, although it's been taking a long time. Certainly can't be done overnight. They have shown more prosperity. They're adding more and more billionaires these days. There's a lot of people moving from the rural areas into the cities. That's looking positive for companies, for businesses are moving up there. We're seeing a lot of sales in different commodities. They're importing like crazy. They are, in fact, expanding their purchases and consumption of just about everything, of smartphones, of televisions, of all kinds of electronic equipment, of all commodities you can think of, whether it's copper and cement and everything else. So there is positivity. I want to make that for certain, but I'm always just trying to bring up the information that you're not going to see on the front page news, that which is not available in Seeking Alpha, that which is not available on the Jim Cramer Hour, that which you will not get in the mainstream media for the most part. I like to pick through all these things and show you the reality. Okay, so when you take my information and you piece it together with all the other stuff you're looking at, you're going to be able to see what's really going on. So I do appreciate everybody that stays for these videos, especially all the way to the very end. I truly appreciate your time every day. I try not to waste a second of it. So let's get on with this here. If you found the video informative, please give me a thumbs up. And when you do that, you're supporting this channel, so I really appreciate it. And if you want the financial education you were not taught in school, these two books have it all. I wrote these books simply to make it easy for people to figure everything out. You don't need to have gone to an economics university program for 5 years and studied really hard and everything. You just need to know what you need for your own financial well-being, to take care of your own finances. You don't need an economics degree to do so. That's a myth, and in fact these people here are the ones driving the Lamborghinis in the boom, and they're taking the bus in the bust. All right, so check it out. Links in the description of the video. If you want the audiobook version instead, it's at themoneygps.com.